Hey everyone, this is Dollar Rewind. It's December 26th, 2025, Boxing Day. Most of America is still recovering from Christmas dinner, maybe returning gifts, spending time with family. The stock markets were closed yesterday, comics was shut down, everything was supposed to be quiet. But I need you to stop what you're doing right now. Put down your phone for a second and actually listen to this. Because while you were celebrating Christmas with your loved ones, something happened in the silver market that you need to understand. And the banks? They were counting on you not paying attention. Let me show you what they hoped you'd miss. The Christmas Eve explosion on Tuesday, December 23rd. Silver closed at $71.73 per ounce. That was the highest price of the entire year. Then on Christmas Eve, December 24th, something broke. Silver hit $72.41 per ounce CNBC, an all-time record high, the highest price silver has ever traded in human history. Let me put that in perspective for you. On January 1st, 2025, silver opened the year at $28.97 per ounce gold silver. Today, we're at $72. That's a 149% gain in one-year fortune. Not 14%, not 49%, 149%. When was the last time you saw any investment double in 12 months and keep going higher? And I'm not talking about some penny stock or meme coin. I'm talking about a 5,000-year-old store of value that's traded in every country on Earth. Now here's where it gets interesting. Markets were closed on Christmas Day, right? COMEX Futures Exchange closed. New York Stock Exchange closed. You couldn't trade if you wanted to. But you know who was open? The banks. The Federal Reserve confirmed that all banks remained operational on December 25th, despite the federal holiday closure silver price. Org banks were open, processing transactions, moving money, moving metal. While retail investors like you and me couldn't trade, the big players were still active, still working, still moving pieces on the chessboard. And if you think that's just a coincidence, let me show you what happened in the weeks before Christmas. Chapter 2, the vault drain. They hoped you'd miss this is the part that should scare you. This is the part the mainstream media isn't covering. In early December, something unprecedented happened at the COMEX. In the first 4 trading days of December, over 47.6 million ounces of silver were claimed for delivery. That represents more than 60% of COMEX's total registered inventory. Let me say that again. In 4 days, 60% of the available silver walked out the door. To understand why this matters, you need to know how the COMEX works. There are 2 types of silver inventory, registered and eligible. Registered silver is metal that's available for delivery against futures contracts. It's the for sale pile. It's what backs up the paper promises. Eligible silver is metal that's sitting in the vault, but it's privately owned. The owner hasn't made it available for delivery. For years, the system worked because there was always plenty of registered silver sitting there. If someone actually wanted physical delivery, no problem. The metal was there, but in December, that changed. Someone, or multiple someones, started demanding physical delivery. Not paper contracts, not cash settlement. Actual bars of silver loaded onto trucks and driven away. COMEX vault inventories have declined by over 73% since 2020. Think about that. 3/4 of the deliverable silver is gone, and it's not just New York. Shanghai silver stocks dropped below 446 tons, the lowest level since 2016. The vaults in China are draining too. This is a global phenomenon, and it's accelerating. Now, if you're finding value in this content, do me a favor. Hit that subscribe button and turn on notifications, because what I'm about to show you next is going to blow your mind. And I want to make sure you don't miss the follow-up videos where we track this situation day by day. Let's keep going. Chapter 3. Why this is different. Some of you watching this might be thinking, okay, silver went up, so what? Prices go up and down all the time. But this is different, and I want to explain why in the clearest way possible. Silver isn't just a shiny metal that investors buy because they think the price will go up. Silver is essential to modern technology. Your smartphone contains silver, every single one. The contacts, the circuit boards, the touchscreen. Without silver, your iPhone doesn't work. Solar panels? Industrial demand remains robust, supported by growth in the solar, electric vehicle, and data center sectors' fortune. Every solar panel needs silver paste to conduct electricity, and the world is building solar panels faster than ever before. Electric vehicles? Each EV uses 25 to 50 grams of silver. Multiply that by millions of vehicles being produced every year. That's a lot of silver. And here's the kicker. These aren't optional purchases. This isn't investment demand where someone says, oh, silver is too expensive, I'll wait for a pullback. This is industrial demand. Companies need silver to build their products. Tesla can't make electric vehicles without it. Samsung can't make smartphones without it. Solar companies can't make panels without it. So when the price goes from $29 to $72, what happens? Do these companies stop production? Do they shut down their factories? No, they pay whatever the price is, because the alternative is worse. This is what makes the current situation so dangerous for anyone betting against silver. You're not just fighting speculators, you're fighting companies that must have the metal or their billion-dollar factories sit idle. And when companies are desperate for supply, when they're willing to pay any price, and when the vaults are already 73% empty, that's when things break. Chapter 4, the Federal Reserve Connection. Now let's talk about why this is happening right now. Why Christmas 2025? Why not last year or next year? Traders are currently pricing in the possibility of 2 interest rate reductions next year. The Federal Reserve has been cutting rates, and the market expects more cuts in 2026. Why does this matter for silver? Because silver doesn't pay interest. It doesn't pay dividends. When interest rates are high, investors prefer bonds and savings accounts. Why take the risk of holding silver when you can earn 5% risk-free in a treasury bill? But when rates are falling, when the Fed is cutting, when real yields are negative after inflation, suddenly that calculation changes. Suddenly holding silver makes a lot more sense. Federal Governor Christopher Waller recently noted that the Fed has additional room to ease policy fortune. Translation, more rate cuts are coming, and investors are positioning ahead of that. They're buying now before everyone else figures it out. But there's something else happening that's even more important. Geopolitical stress. U.S. President Donald Trump ordered a blockade of sanctioned Venezuelan oil tankers, with some unsanctioned vessels also affected fortune. Oil markets are getting nervous. When oil markets get nervous, inflation fears rise. And when inflation fears rise, investors flee to hard assets. Silver is catching a perfect storm. Falling interest rates, rising geopolitical tensions, supply shortages, and industrial demand growing, investment demand surging, and the Christmas holiday timing. That gave the big players a window to make moves while retail investors were distracted. Markets closed, most people not paying attention, but the machinery kept running, the vaults kept draining, the price kept rising. Chapter 5. What the experts are saying. I don't want you to just take my word for this. Let me show you what the professionals are saying. Analysts like Andrew Maguire predict silver could soar to $80 or higher as COMEX's price control mechanisms break down. Think about that for a second. We're at $72 right now. $80 is only another 11% higher, but that's the conservative estimate. Some forecasts predict silver could reach 98.58 per ounce by January 2026. That's less than 5 weeks away. Other analysts are comparing this to historical silver squeezes. The event is being likened to the Hunt brothers' 1980 squeeze, when 3 Texas billionaires tried to corner the silver market and drove prices from $10 to $50 in months. But here's the difference. In 1980, that was speculation. Rich guys trying to manipulate the market. The government could step in, change the rules, and shut it down. Today, this is real industrial demand. This is real supply shortages. You can't change the rules when Samsung needs silver for its factories. You can't declare force majeure when every solar panel in America requires silver paste. This isn't manipulation. This is mathematics. Global supply deficits have persisted since 2021, with record deficits including 238 million ounces in 2022 due to rising industrial demand and reduced mine output. The world is using more silver than it's producing every single year, and that deficit is growing, not shrinking. Chapter 6, the Christmas trap. So let me connect all the dots for you. Let me show you the trap that was set. December 23rd, silver hits $71.73, highest price of the year. Volume is surging, momentum is building. December 24th, Christmas Eve. Half-day trading session in New York. Most traders are already mentally checked out. Silver spikes to 72.41, all-time record high. December 25th, Christmas Day. Markets completely closed. Retail investors can't trade, can't buy, can't sell. The price is frozen on their screens. But banks remain operational. The Federal Reserve is still processing transactions. Money is still moving. Behind the scenes, the machinery keeps running. December 26th, today, markets reopen. And you know what the price is doing? It's holding above $71. The breakout didn't reverse. The Christmas rally didn't fade. Why? Because this wasn't a speculative pump. This was real demand overwhelming limited supply. And while you were carving turkey and opening presents, while you were distracted by family and festivities, the smart money was quietly positioning. The big players were moving pieces on the board. This is the Christmas trap. Make a massive move during the holiday when nobody's watching, when retail investors are distracted, when the news cycle is dead, when nobody can react. By the time you get back to your trading desk after the holiday, the breakout is already confirmed. The new floor is established, and you're left chasing. Chapter 7. What happens next? So what do we do with this information? Where does silver go from here? I'm not going to sit here and give you some crazy price prediction. I'm not going to tell you silver is going to $500 next week. That's not how I operate here at Dollar Rewind. I give you the data and let you make your own decisions. but let me tell you what I'm watching. First, traders are pricing in 2 interest rate cuts by the Federal Reserve next year. If those cuts happen, if rates keep falling, that's bullish for silver. Second, COMEX inventories have declined by over 73% since 2020. If that drain continues, if registered inventory keeps falling, we could see a delivery crisis. And if there's a delivery crisis on COMEX, the price is going vertical. Third, industrial demand from solar, electric vehicles, and data centers continues to support fundamentals fortune. As long as those industries keep growing, silver demand stays strong. And fourth, geopolitical tensions, oil disruptions, trade wars, currency instability. All of these factors push investors toward hard assets. And silver is the most affordable hard asset with the best upside potential. Look, I'm not here to tell you to mortgage your house and buy silver. I'm not a financial advisor. This is not financial advice. But I am here to make sure you understand what's actually happening. While the mainstream media was running stories about Christmas shopping and holiday travel, a seismic shift occurred in the silver market. The vaults are draining, the price is breaking out, the fundamentals are stronger than they've been in decades, and the banks were hoping you'd miss it during the holiday distraction. Now you know. Now you can make an informed decision. This is Dollar Rewind. We cut through the noise. We show you what's really happening in the markets while everyone else is distracted. If you found value in this video, please smash that like button. Subscribe to the channel if you haven't already. And most importantly, turn on notifications, because this story isn't over. Tomorrow, I'll be back with another update. We're going to track the COMEX inventory numbers in real time. We're going to watch the Shanghai-New York price spread. We're going to follow this situation day by day as it unfolds. The Christmas trap has been sprung. The question now is, where does it go from here? Drop a comment below. Tell me what you think. Are you buying silver at these levels? Are you waiting for a pullback? Are you skeptical? I want to hear from you. This is history happening in real time, and unlike most of the financial world, we're not looking away. We're watching every move. Thanks for watching Dollar Rewind. I'll see you in the next one.